Welcome to the Daily Brief, where I'll go over the action in the market for Friday, February 17th, and then we'll see how things look for Tuesday, February 21st. Please remember that the markets will be closed on Monday in observance of President's Day. Well, we had another down day. In fact, we got to the point where we were at the bottom of this range, and with Friday's decline, we've now dropped below that range, and that has turned things a bit more negative, especially in the short term. We'll have to see if that flows over into the intermediate and long term. On a positive side, the bar looks fairly friendly, and I'll show you that when I go through that particular chart. But it ended up being a pretty down day, nonetheless, from Thursday's close to Friday's close. So right at the open, we had a gap lower open with prices going down below S1 at 40.74. We then fell down below S2 at 40.58. We went all the way down to 40.50. That seems to be kind of the new base for right now. It had been 4100. Well, we dropped below that, so now we're down to 40.50. As the day went on, prices tried to bounce up from that 40.50 level, and they did get back up to S1 before falling again. Prices then rebounded above S1 and closed slightly above S1. So we were down 0.28%, not a real big number as far as the percentage is concerned, and we're still below average overall. That could be seen as positive. But we've seen some up days on below average volume as well. Now we're seeing more down days on below average volume. It just still indicates that there's a real lack of conviction. The technicals are turning more negative, especially in the short term, because of this inflation and interest rate scenario that has the markets all fixated. So here is the intraday action where we gapped lower, and the futures were pretty negative during the night. We were down anywhere from 0.5% to almost 1%. We repaired some of that before the open, but then we gapped lower below S1. We went down to S2, fell a little bit below that down to this 40.50 level, bounced back up, came back down, bounced back up, came back down. So this is a pretty solid base. At least on the 10-minute chart, we hit this level 3 times, actually 4 if you include the next bar after that. And then we bounced up a little bit to get above S1, come back down to S1, and then closed a little bit above S1. So what are some comments that we can make? There's still this scenario that the market's been latching onto, that the Fed will be able to pause their interest rate hikes in the near future. Well, that's now in doubt. We're seeing a lot of strong economic data that is really plaguing this whole scenario. And then Fed Governor Michelle Bowman, who is an FOMC voter, came out and said in an interview that rate hikes should continue until there's a lot more progress on inflation. So we still have a Fed that is very hawkish. The Dow and the small caps did advance. They had up days on Friday. The S&P has now dropped below the recent range. On a long-term basis, we're still a little bit topsy with one of our moving average studies. On a short-term basis, we have our Stochk RSI, which has now become oversold. And on an intermediate-term basis, our CCI 14 period has gone extreme negative. The dollar was down and interest rates were also down in Friday's session, which kind of changes the trend because interest rates had been inching higher. We still have all of our yield curves that remain inverted. Sentiment didn't change. It was 69 after Thursday. Well, it's 69 after Friday. And I'll go over the economic reports on the next slide. We're seeing the ADX starting to weaken. Now that we've dropped below that range, the ADX has dropped below the moving average. It's still positive overall because the green line's on top and we're still above 20, but we're starting to see a weakening trend. I've changed our bias to negative and our momentum to negative. We had 2 down days in a row, so it's hard not to go with that scenario. The economic reports that came out, import prices came out down 0.2%. The last time they were down 0.1%. Import prices, when you take out oil, were up 0.3%. Last time they were up 0.4%. Export prices were up 0.8%. Last time they were down 3.2%. And if you take out agriculture, they were up 0.8%. The last time they were down 3.3%. And then we had the leading indicators, which came in at down 0.3% as expected. Last time we had this report, it came in down 0.8%. Here's the current version of the inflation nowcasting. I've been including this every day in the videos. I'll probably just go back to the weekly videos. Probably what I'll do is I'll look at this every day, and if it's really telling us something different, I'll talk about it. If not, I'll just cover this in the weekly videos. but we're pretty much flat based on PCI going sideways, both with the inflation rate and the core rate. And at the bottom, we're still seeing the green line and the yellow line going sideways from what they expected on Thursday, and that's the PCE inflation as well as the core PCE inflation. The Ulster Index is still suggesting there's not a lot of fear in the market, even though it ticked up slightly. Here's the VIX. After getting back above 20, we're right back down just a little bit above 20 now. So this actually declined a bit on a down day. And the bar chart shows how we closed right near the bottom of the range for the VIX. The volatility of the VIX, after looking like it might be ticking back up with volatility, it's starting to come back down now based on the bar chart and the line chart. We're keeping an eye on this relationship here between the VIX and the S&P 500. This is still getting pretty high. We haven't reached an extreme positive reading yet, but we just want to keep an eye on this. And here's the ADX showing how we're dropping below the moving average. The green line's on top, even though it's declining, but we still default to that. The red line is starting to advance. So if this continues, we'll see the ADX go down. The green line will come down, the red line will go up, and eventually they will cross and turn things more negative. On the daily chart, this is what I'm talking about, where we had a bar where the open and the close were just about at the same level. We opened, went down, came right back up, and closed almost at the high for the session, even though it was a down day. And that could be seen as a positive bar, even though it was a down day. We just want to see, can the market pick up on some of this momentum and go back higher, or is it going to continue to break down lower, or are we going to continue to go sideways? The Stochk RSI is still extreme negative. The force index has now dropped below zero, so that's turned negative. This is another short-term indicator that we use. The CCI 14 is now becoming extreme negative, and our oscillators are pretty much all rolling over now. The slope, the TSI, the MACD, the PMO, the PPO, those indicators have all rolled over below their moving average, where we're rolling over with the tricks, and we're starting to roll over, being slightly flat with the KST. The PMO has now crossed over negative, but it did that a number of days back based on price and volume, based on these other indicators. Our PMO steady, a little bit of a tick up with the PMOs that are rising, but we're declining with the buy signals and still declining with those that are above zero. This is a little bit positive. The Swindle Trading Oscillator still remains above zero, even though it did decline based on price and volume. The BPI is not really breaking down, at least yet, even though we broke down in this range. We were here not so long ago, so nothing new is being generated with the BPI. We're seeing a little bit of weakness coming back in with our NYSE BPI. This is a broader measure where it broke out and has now been coming back down. Chaikin money flow is still holding up. It declined a little bit, but we have pretty solid green bars that are well above zero. TTM squeeze continues to look a little more negative with the dark colored blue bars, and we're getting closer and closer to that zero line. We're still neutral with the go, no-go system with the lighter shade of blue. And we dropped below the anchored moving average going back to the all-time high, although we're just right underneath it. Short-term fib levels were in no man's land. We dropped below this 100% retracement. We did not get back down to this other retracement at 4,007, so we're right in between. And our longer-term fib chart still is just suggesting that we're in no man's land. And the longer-term chart is also looking more like no man's land with the support down below where we're at about 40.20. Another support level that was broken on Friday was the 20-period moving averages. We closed down below that, but we're right at the lower end of the exponential moving average. That's the blue line. And this shows the same thing. We're still above all the other moving averages, but breaking down below the 20 is short-term negative. The Elder Impulse System continues to be negative, and the McClellan Oscillator continues to be below zero, even though it ticked up slightly. So our summation index based on price and volume continued to decline. That's negative. Nothing really happened as far as our new highs, new lows, so we're going sideways with the 5-period and declining slightly with the 10-period. Accumulation distribution. This is still holding up fairly well. We're still above a rising moving average and actually climbing. Volume turned back up a little bit, but we're still below average. So this histogram, which had been declining, is turning up slightly, but it's still showing a drop-off in volume. And the ratio between the S&P 500 and the utilities after coming up and actually doing fairly well, it's now starting to go back down. And a lot of times when it turns and goes the other way, that can mark some kind of a top in the S&P. The 20-period moving average of the open, high, low, and close, we held up right above the high while we broke down and actually got below the close, only to come back up to the low here. And we're just waiting to see, will one of these lines act as support? Here's the longer-term moving average study, where we're still extreme positive with the 150, where we've now dropped below extreme positive with the 200. The Dow was able to recapture the pivot level for February, so that's slightly positive, and it's still above its 50-period moving average. However, the Elder Impulse for the diamonds continues to be negative, and we've switched to negative with the Qs. The praying bottom fisher is still giving us a buy signal, but we're just not seeing much confirmation from that. Looking at some of our possible positive scenarios, we're dropping below the zero line based on price, but we haven't dropped below based on volume. When we look at the 19-day exponential moving average of the advanced decline ratio, after spiking up with the 10-day average of the highs minus the lows, we're coming down slightly, but we're still extreme positive. The 2-year Treasury, it had been starting to go back up. It may take out this spike, even though it declined slightly in Friday's session. We'll be watching that. Our longer-term look at the 50-period exponential moving average of the new highs minus the new lows is still holding up quite well. And here's that same chart where we're still above zero. The ratio between the staples and the S&P 500, we're coming back up, but we're still far away from this spike. So that's still looking like a valid spike. Our outlook for Tuesday. Please remember the markets will be closed on Monday for President's Day. The FOMC meeting minutes will be released on Wednesday at 2 p.m. The technicals are turning negative and we're dropping out of the bottom of the recent range. On Tuesday, we have preliminary IHS market manufacturing as well as a separate report that deal with services. Those are 2 PMIs that will be coming out. We have existing home sales. And then the whole list of geopolitical events. But the markets still are really fixated on this inflation and interest rate scenario. Looking at these statistics, it's not very good for Tuesday. We are pretty much negative. The Dow is only up 31.8% of the time. The S&P is only up 33 1/3. And the NASDAQ is only up 38.1% of the time. So historically, Tuesday is not a real positive day. That can always change. And then the other things that I talk about periodically that have to do with the Stock Traders Almanac. We do have one speech that'll be on Friday. That's Governor Philip Jefferson. And that'll be at 10:15 a.m. Eastern Time. That's the only speech that I could find. That doesn't include any interviews that they may give. So our scenarios, the technicals are turning more negative, but our ADX is still looking more positive. The up scenario can't really go with that one right now because the technicals are turning negative and we're above 20, so we can't really go with the sideways one. We still would probably default to the positive trend because of that green line, but if we see follow-through weakness, that'll quickly turn over to a more negative stance. So what is our conclusion based on how things were on Friday? The S&P is turning negative. On a short-term basis, we're negative. Intermediate term, it's turning negative. We're still positive in the long term as long as we stay above the 200-day simple moving average. Thank you. I hope you found this helpful. I will be preparing the weekly video, the intermarket analysis video, the deep dive video, and the supplemental video over the weekend. I might take a little extra time with that because we have a 3-day weekend. So I will talk to you in the next video.